Hi, this is OptionBench, and the tool on screen is Trade Doctor. The idea is simple. You build an options position leg by leg, and before you put it on, it runs a statistical health check, probability of profit, expected profit and loss, liquidity, and risk flags. A second opinion on a trade before real money touches it. So, a quick word on who I am first. I'm Romuald, a retail options trader, and I built OptionBench. I made it to answer exactly the kind of question you are about to see. So, now let's build the trade. We are on the main page of OptionBench. We go to the Trade Doctor option tool. We select a ticker, TLT, and then I will build my credit put spread. So I sell a put, expiration date 39 days, and a strike of $85. You can see here below the profit and loss curve at expiration building. Then I add a leg. I will buy a put with the same expiration date and at the strike of $83. I choose a take profit of 50%, and then I click on Analysis Doctor. After a few seconds you have the results, and here's the trade TLT credit put spread 39 days out. So the diagnostic gives it an 84% probability of profit. Okay, before I say anything else, look at the number and decide for yourself. 84%, would you put this trade on? And hold that thought, because the win rate is the most seductive number on this screen, and it's the one that tells you the least. So let's read it in plain numbers. You sell the 85 put, you buy the 83 put at $2 wide spread, you collect 39 cents of credit, so your maximum win is $39 per spread. Okay, so your maximum here loss is $161. So in fact you're risking 161 to make 39, and the plan isn't even to hold for the full 39. The take profit is set at 50% of the credit. Okay, and so you're really working toward about, let's say, $20 of reward against 161 at risk, but 84% of the time you win. So on the surface that sounds like a trade you would want a book full of. Okay, so now look one tile to the right of the probability right here. You see the average profit and loss plus 1 cent. I want to be precise about what that number is because it's the most important number on the screen. It's not the price of anything. It's a mathematical expectation. So the tool runs a Monte Carlo simulation, thousands of simulated price paths for TLT between now and expiration. On each path, it values the spread, applies the same 50% take profit rule, and records the result. Plus 1 cent is the average outcome across all those paths. So here's what the trade really is. 84% of the path win, but they win small because you take profit at $20, which is 50% of $39. So the 16% that lose big, up to 162. Average the wins and the losses together, weighted by how often each happens, and the whole thing nets out to 1 cent per share. That's not a losing trade, okay? It's something more subtle and more dangerous, a trade whose entire edge is 1 cent wrapped in a reassuring 84% win rate. This is where the diagnostic earns its keep. It doesn't just show you the expected profit and loss, it judges it look at the checklist, for example. Expected profit and loss is flagged. Plus 1 cent is 3% of the capital. Okay? And 3% on a trade with real tail risk is thin. The tool warns when that ratio is thin. And there is a second flag, IV context. IV is implied volatility. So you'd be selling premium with an IV rank of 5%. That means implied volatility is near the bottom of its range. There's almost no premium to collect. The alert spells it out. Credit strategies collect little when IV is cheap, so the edge is thin. 2 cautions. Neither is a hard red flag, and the tool says so. It lands on some cautions to review, but together they tell you the 84% is hollow. And there's one more line in gray here, costs and frictions. The modeled profit and loss excludes slippage and broker commissions. Those eat small edges first. The 1 cent expected edge doesn't survive contact with real feels. After costs, you're taking genuine tail risk from an expected outcome of essentially zero. So here's the whole lesson in one sentence. A probability of profit tells you how often you win. It tells you nothing about how much you make when you're right, how much you lose when you're wrong, or whether the edge survives costs. This trade has a beautiful win rate and almost no edge underneath it. Those are different things, and only one of them shows up in the headline. So, would you still take the trade? Maybe you would. Selling thin premium isn't automatically wrong, but now you're deciding with the whole picture, not just the headline number. This is Trade Doctor, one of the tools in OptionBench. You build a position, leg by leg, and it runs a statistical health check before you trade. Probability, yes, but also the expected profit and loss relative to what you're risking, the loss profile, the liquidity, and event risk. So it's in beta right now. We are in June, free through the summer. The waitlist is at optionbench.com. The link is below with our Discord if you want to talk methodology, and if you think I'm wrong about this TLT trade, the comments are right there. Do not hesitate. Thank you for listening. Goodbye.